I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Coming up in this show, I'm going to bring you my opening comments on the markets. Katie will show you trade planning with options, looking at GDX, combining option strategies with askSlim.com methodology. And I'm going to bring you a hot minute on the dollar, and a breakdown has a very negative message. And I'll show you our level 4 special membership, 3 months, save $35, and you're going to see me in action using a lot of this content today. We have a huge amount of content and analysis and education. And then I'm going to bring you analysis of the stock market with a deep look of SPX and more. Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market soared last week as softening inflation sent Treasury yields lower in anticipation that the cycle of Fed tightening was coming to an end. Stocks were strong right out of the gate as China reported their inflation rate was near zero and that they promised more stimulus for their faltering economy. Then Wednesday and Thursday brought the CPI and PPI, and stocks moved sharply to the upside pre-market on both of those days, never looked back during the whole week. While buying broadened throughout the sectors, and tech and AI continued to rise. And with all of this buying, the S&P 500 hit our upwardly revised targets, which was around 4,500 to 4,535. And the S&P 500 and NDX both soared well beyond the targets that we have given at the beginning of the year in our big picture analysis. That, of course, is corresponding to declining Treasury yields, and also the dollar collapsed. You're going to see that in my hot minute review on the dollar coming up. And in an odd paradox, while investors celebrate the changing conditions, the dollar big decline really means that commodities could be moving up sharply. And that could be sending prices up again. So while the Fed is done raising rates or very close to it, their balance sheet is still going to be coming down. And rate cuts, well, especially with the tight labor market that we have, and the positive wealth effect from the stock market rising, well, rate cuts, they're a long way off. And that brings us back to the stock market valuations, which are historically high. I'm going to show you a slide right now, and you're going to see that there's only once in history that the stock market has been at these valuations. This is, of course, a discussion of the Buffett indicator, which is one of the best ways to look at a historical stock market valuation. Let's take a look here as we look on this left chart over here. And what this shows you is, as of a week ago, July 7th, that the Buffett indicator ratio was all the way up to 175%. That means that the value of the stock market, as measured by the Wilshire 5000, is 175% of the GDP of the United States. And that's versus the long-term trend of around 120. And that's a rising trend that you can see right in here. So this puts the stock market at extreme valuations, as you can see, getting up only once higher than that, and that is when it was up over 200% at the end of 2021. And you can see here in other bull markets, this was the secular bear market period over here in the 70s, but that got up to a peak, not even up to 100%. Over here in 2000, the peak was under 150% when we had the dot-com bubble. And here in the beginning of the great financial crisis, it was only up to about 107%. So this is an extraordinary period where the Fed and our U.S. government just overstimulated, and now you have this rebound going on over here. And these valuations are extraordinarily high. Just a little lesson in here, and thank you. The source of this was the current marketvaluations.com. They rate the Buffett indicator, of course, as overvalued, and they state the Buffett indicator is a ratio of total United States market GDP as of July 7th, and the ratio is calculated as such. And it shows you the aggregate market value and the annualized GDP, which comes out at 175%, as you see right over here, which is extraordinarily high. And this ratio, they say, fluctuates over time. And the stock market can be very volatile, of course, but GDP tends to grow much more predictably. The current ratio of 175% is approximately 45.82% or 1.5 standard deviations above the historical trend line, suggesting the stock market is overvalued. Well, big surprise there. And the last thing is they state the Buffett indicator expresses the value of the U.S. stock market in terms of the size of the U.S. economy. If the stock market value is growing much faster than the actual economy, and you know where we are right now with the stock market where it is and the economy faltering, then it may be in a bubble. Well, this most certainly, I believe, is a bubble, and we really need to think about that as we move forward. So that's a look at the Buffett indicator, and I think something that is very, very important to consider. And yes, this is a period of extremely strong market, and much stronger than our analysis had projected. Getting through our first target levels and now hitting our revised upside target levels. And some of the evidence of our technical indicators says it's not done yet. And investors, well, they remain quite positive right now. But for them, I believe the risk-reward ratio is quite negative. Details on that is coming up. For the week, index is up between 3 and 5%. The Dow was a little bit took the worst of it, but up still about close to 3%. And the Russell, the strongest, up about 5%. And the Russell benefits from rates moving down, of course, and the rotation that is going on underneath here as the market breadth had improved. I'm going to show you that there's a signal that came on the Russell that said extreme overbought. Later on in the show, you'll see that in our option bias indicator. Bond market 30's up about 3.5 points. The 10-year yield's down 22 basis points. Gold market, of course, responding to the dollar collapse, up about $33. Now, I think the gold market might have a test of those lows closer to 1900 before it takes off on the upside. We thought it was going to be Q2, Q3 or 4 where the big upside was. And we still think that's the case. Silver is not waiting. Silver, I think, made its bottom early, and you can get that information in the Future Speak show when RV does that this coming Wednesday. Up 11% on the week, and that's headed over 27. The dollar down over 2%. I think it's going to be much worse over a long period of time. And oil also improving conditions technically, up about 270 on the week, and that of course is benefiting from the decline in interest rates, the decline in the dollar. And as I said, there's that paradox where as the dollar moves down, as a result of interest rates moving down in a less competitive interest rate environment for the U.S. versus the world, then the commodities are going to be jumping. And that is going to be a problem for those that hope that the Fed will be cutting interest rates anytime soon. That is the opening, and I've got lots more here to show you. For those of you that are new to our show, please go to askSlim.com and subscribe. You can subscribe for free, or you can really get acquainted by becoming a level 1 member. Just an unbelievable value, 3 months for $45 for daily information. YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. Any questions you have about what we present, please write to Matt at askSlim.com. Okay, this is Katie. Katie is our options expert and also very much an expert in cycle analysis. She's going to combine the knowledge of option trading with askSlim.com charting method and give you a couple of option trades here in the GDX. So please watch this. This is just amazing stuff.
Hi, this is Katie Anagnostos, and this is a trade planning with options video on July 13th, 2023. Today we're going to look at two option strategies in GDX, which is the VanEck Vectors Gold Miners ETF. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askSlim.com. Let's get started. Over on the daily chart, we recently had this short-term low right here that corresponded to the intermediate cycle low on the daily chart. Now, our reversal scout here has turned green, and our slim ribbon, which colors the candles green, gray, or red depending on momentum conditions, has improved from negative to neutral, so improving momentum conditions. Now, this current daily cycle that we're in is due to end between August 16th and August 24th. If we quickly switch back to the weekly chart, note that the weekly cycle timing window is due to end August 11th. So this daily cycle timing is slightly beyond that. Therefore, we would not expect a failure, but it isn't unreasonable in terms of timing, so that is something to be cognizant of. So back on this daily chart, what we would like to have happen is we would like to see a small pullback in GDX to set up a good long side opportunity. Our 2-hour chart is currently showing positive momentum. So if we got a pullback, that might switch to negative momentum. Then when it would return to positive momentum off the pullback or a signal on the slim ribbon PO, that could give us a good entry signal. Now let's switch over to Tasty Trade. Here's Tasty Trade. We're going to look at the GDX options chain in the August 25th weekly expiration cycle to give ourselves a little extra time. You can also use the monthly expiration if you prefer that. Now GDX has, that's better. GDX has an IV rank of 9.4, and in the August 25th expiration cycle, implied volatilities are 30.1%. So a bullish short premium trade would involve selling a put or some combination of that. And there's just not much premium in here unless you go right at the money. Therefore, we're going to look at a long premium trade idea over on the call side. First, let's look at a simple call call debit spread that involves buying an in-the-money call and then selling an out-of-the-money call to reduce our cost basis. Now, you can make your spread as wide as you like. We're trying to get the max profit, max loss ratio close to 50-50. I'll demonstrate a $5 wide. Let's buy that 30 call, and then let's go and sell the 35 call. So this is a $5 wide debit spread. We have to pay a debit of $2.35. $235 is our max loss right here. It's also the capital requirement to place the trade. And our max profit is the difference between the width of the spread and the debit paid. So in this case, it's $265. Now, because we can make slightly more than we can lose, our probability of profit is just under 50%. This trade gives us just over 50 long deltas, and we have to pay a daily theta of about 17 cents. Here's the risk graph of this debit spread: capped profit zone in green and capped loss zone in red. We want GDX to stay above our break even at 32.35. Anywhere above that is profitable. tastytrade is our preferred options trading platform. If you like this platform and would like to learn more about them, you can click on the Marketing Partners tab and then click on tastytrade underneath that on the askSlim homepage. That will take you to this page where you can learn more about tastytrade. If you decide to open an account with them through our link, that helps you with some special bonuses, and it also helps us. So please consider checking that out. Now back to tastytrade. For those of you who might be interested in a stock replacement strategy with greater profit potential, I have a trade idea for you. Let's go and buy 2 in-the-money calls just around the 70 delta. I'm going to actually skip this $0.50 strike and go to this 30 call. We're going to buy 2 of those. Now, the problem with buying options is that we're purchasing extrinsic value, which is essentially just time value that decays. In this case, we would be purchasing extrinsic value of $136. So let's try to wash out some of that extrinsic value by selling a call with as close to that much extrinsic as possible. Notice right here that the 32 call has an extrinsic value of 136. So if we sell 1 of those, that cancels out basically all of the extrinsic that we are purchasing in our long calls. So this is a type of ratio spread that's called a zebra, zero extrinsic back ratio. Notice that it's very much like a debit spread. There's a long call and a short call. It's just that we double the long call and try to match up the extrinsic values. So we pay a debit of $4.10. That's also our max loss. Our max profit is unlimited to the upside. Our probability of profit comes in right around 50%, just like stock. We have just under 100 long deltas, and we pay a daily theta of $1.17. Let's take a look at the risk graph. Here is the risk graph. You'll notice that we earn nearly 1-to-1 like stock with nearly 100 long deltas. On the downside, unlike stock, our loss is capped at at 410. So instead of putting up over $3,000 for 100 shares of GDX, we can control that same 100 shares that we just put up with $410. So this is a very capital efficient stock replacement strategy using options. That's our trade planning with options video for today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
That is fantastic, Katie. And I want to remind everybody, please do open an account at tastytrade and go to the top of our website and click on Marketing Partners and open it right through there, because it helps us and it certainly will help you. This is a hot minute on the US dollar. This is a hot minute on the US dollar, which is turning quite negative, and I'm going to show you this very quickly. This is the daily chart of the DXY. And for those of you that are brand new, you can see on the bottom are the cycle brackets. These are not cycles. These are just a drawing tool that lets us see the rhythms in the market, or the heartbeat, as they say, of the market. You can see in here these harmonic families in here. This is the dominant cycle, and there are 3 minor cycles that make up each of these dominants. You can see 1, 2, and 3. You can see right over here 1, 2, and 3. And the beautiful timing between the major lows here and here and here and here. Now, what's quite significant is the formations, how these set up. Normally, when you get this kind of a positive formation that you see right over here, where this low is above this low, it is a bullish occurrence. However, when it fails in resistance and then breaks the cycle low, that is a very negative occurrence. When I zoom in a little bit here, you can see that has happened. as you had this cycle low at 101.92 in the DXY that got broken right over here. We warned about that potential for our members as it failed in this resistance area and then started to break down. You can see once it got under these levels, it just went into free fall. And right over here, it's coming down and hitting some fib extension levels in the dollar. There's another one down over here that it may get to at about 99. And this points to this low here in about the next 5 to 8 trading sessions. Here you could see after that we expect a rally, but that's likely to fail and keep moving down with this cycle, this big harmonic family pointing to a low in early September. When I switch over to the weekly chart right over here, you can see also the beautiful harmonics that are in here and this significant breakdown below this level right over here. And that sets it up for a lot of trouble. This cycle right over here points to a low that comes somewhere maybe end of January, beginning of February of 24. And the monthly patterns show a decline out to the end of 2024. This is an extremely negative setup. Again, the large harmonic family right over here. The first minor cycle, very bullish. That brought this big rally right over here, which you saw. The failure which came, the downturn right over here in our reversal scout, which talked about the negative occurrence and this likely to correct down through this time frame. Now you have this cycle right over here coming down, which points to coming down sometime around the end of August, maybe even later to this September period we saw on the daily chart. Then a rally and down again. This is a very negative scenario in the dollar. And of course, what this means is that it's setting up a positive scenario for gold and silver and the metals markets and other commodities also. This is a result of the markets getting ahead of the Fed, who is likely to be done raising rates in either this meeting or the following meeting coming up July or later, and maybe only one more increase this year, if any, and interest rates are ready to move down, and the dollar is likely to get slammed over this next coming year or more. Dollar very negative right now, and that is a hot minute. Okay, what you've been waiting for. I've got so much to show you today. This is our level 4 top tier special trials, first time subs and upgrades. First 3 months at a special discount for level 4, 35% off of our quarterly special with only $303.75. That's $101.25 a month versus regular $159 a month. And there is so much in there, it is mind-boggling. Also, sign up for this level 4. You can also upgrade if you're a current member, and you're going to enjoy the premium version of our amazing MCM, the Market Condition Monitor, and this is now included in level 4. Take a look here at the MCM. You're going to get an idea of what you get in here, and I will be highlighting this a little bit later in the show also when I use it in the analysis. And what you're going to be able to do is toggle and select your own trading style. From intraday to multi-week swing trading, over 115 symbols of the most widely followed stocks and ETFs, and you get notifications of changing conditions. Here you can see the trade setup conditions, and you can scroll on this on the 115 different symbols that are in here, and then there's a change log when something changes in a specific time frame that you're looking at. This is just an amazing application that is included here in level 4. I'll show you more of that later on in the show. With our top tier special trial for first time subscribers and upgrades, you're going to get our multiple time frame charts, our entire focus list of 84 symbols. You can import, save those live for the Thinkorswim platform. Yes, it is better to have a Thinkorswim platform in order to make the most of the level 4, but still there's tons of things that you benefit from even without it. You're going to get our proprietary studies, a Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, and more. These are all our proprietary indicators, and they are fantastic. You'll be able to view live on the TOS platform. You're going to get our archive of the custom charts with our best indicators, support resources, including live webinars, chart analysis, and trade planning and Q&A with the askSlim team, analysts on Discord, and best practices for using askSlim custom charts and studies, and the MCM, and everything that's in level 3, 2, and 1. There is far too much for me to show you in here. It is for traders and investors of all different types. This 3-month special, you can learn more by going to the top of the askSlim.com page. Click that Learn More button, and then you can sign up right over there. If you have questions, write to Matt at askSlim.com. 35% off. Just absolutely amazing for our level 4 that includes more, I think, than any other trading site brings you. All right, stock market analysis and projections on the S&P 500. Important information. Please do read this slide, and it tells you about our approach to the market and what that means for you when you use our information. This is the askSlim.com level 4 chart grid that I'm going to share with you right now. And yes, this looks pretty messy when you look at that. We're looking at the S&P 500, NASDAQ, and the Russell. What I'm going to share with you on here is the S&P 500. And when I blow these up, you're going to see that it is quite clear. So this is our normal analysis right over here. And I'm going to share with you this analysis. And then we will look at some other things that I think are very significant tools for the use of this analysis. Remember that we are cycle analysts here at askSlim.com. On the bottom of the cycle brackets, they are a drawing tool which shows you the harmonics in the market. In other words, the phases when the market is, when money is flowing into the market is early on in these phases, and when money is flowing out of the market is later. We call this the rising phase right in here and the declining phase right in here. And then there's a bottoming phase or a peaking phase. Right now, you can see where we are is clearly still in the rising phase. What happened was that this was so strong over here that you could barely get a decline in this minor cycle, and it continued to the upside. Now, note that you have these beautiful cycle rhythms right in here that give you important information, and that sets up a period here of risk, as you see in all of these yellow zones over here, and that comes out into this August through potentially out into early October period, where there's the biggest risk of decline. Still, we are rising, and everything we're looking at is quite strong. You had this, the reversal scout turn up right over here back in April, and it has been rising and telling us about internal strength on the intermediate chart ever since, and it continues to rise. Now, it has risen up to a key level right now. First, we need to state that this was our target zone right over here, and you could see it moved easily through that. That target zone was given at the beginning of the year. This blue area here is where the fib extensions are, which gave us the higher targets, and the major 78.6% right over there, which is really the outside of where we thought the market could potentially rise. Now that gave us an upside target of 4,500 to 4,530, and it has now gotten up into that right now. This is a very key area for the stock market. Were it able to get through that, it would likely get up into this fib extension zone that comes off of the daily chart. I'll show you that in one moment. This is 45.92 to about 46.70 right over there. So this is a much higher area than we are right over there now, because of the time frame in here, where it is likely that the market will continue to rise into somewhere around mid-August. There's a pretty good probability the market is able to get through this level at the major 78.6% up to this area near 4,600. So we're looking for that right now as what is the most likely. With everything we're looking at still quite positive, we can't look for a top right now. Our analysis on implied volatilities on the VIX shows that the likely bottom in implied volatilities comes sometime around mid-August. That's why we're projecting. Now, the reason I have this projection still at around 45.30 for the lower projection is because there could be a pullback in here, and that's based on the Russell, and I'll show you that in a little bit. So this is the look at the S&P 500, and you can see here on the weekly chart still looking positive at a tough spot with a potential to head up towards that 4,600 area by mid-August. Now, when I switch over and I can click an upward arrow to move over to the daily chart right over here, and what I want you to see, and here is the option bias indicator, which is on the bottom, and that is telling us, look where it turned green right over here. So this is back in April, and it said that through this period right over here, all of your option of trades in the indexes or the S&P 500 should be biased to the long side. Absolutely an amazing indicator. Now, see this little green, dark green or light green down over here? That is a little warning that it is getting to be overbought. So that's just a little warning there. You could see here where the bottom warnings were coming and how it made its lows right over there. So that was really good. Now, again, this is that tough area right over there where we have the it peaking right around this area of that major bear market retracement level, 45.30-ish, and then over here at this extension level, which comes out just under 4,600. And here is that corrective area. Now, the 18-day Russell cycle is pointing to the market pulling down a little bit right in here. And I think if it did that, it would be a buying opportunity for the short term and then getting that move right over here before it begins to get into the August time frame that causes problems. Now, again, this period over here is another rising phase, and that could be ultimately where the peak comes out into that mid or late August period. So it's kind of maybe a little pullback and then another move up, probably through the resistances, another pullback, another move up. And you could see this points to a much more choppier period ahead than we are in right now. So again, the option bias indicator giving you a very strong indication. Here you have the daily chart, and the daily chart giving you this also back here at the end of March, beginning of April, where this slim ribbon turned positive. It went neutral for a couple days right in here and then turned positive again. On the bottom, the slim ribbon PO. This is unbelievable indicator, and you need to have Thinkorswim for level 4 to be able to use this indicator. So I really encourage you to open an account there and become a level 4 member. These are momentum resumption signals, and you could see the value in there of how good they are. You almost got one here, but the market was too strong to get down and give it to us right there. So this has been incredibly strong. Where you see that. So here you got a downward resumption signal in March. The market fell after that, but then it turned neutral and then began to turn positive. Right now, still positive, and you can see this is all part of our sum of the evidence analysis. And here you could see the askSlim market condition indicator. And it has been, and this is on a 2-hour chart that you look at this, it has been super positive this whole time, up near the 100 level. This goes from plus 100 to minus 100, and you can learn about that by going to the askSlim.com website about how to use this, but it's been just absolutely exceptionally strong. 2-hour chart, 2-hour slim ribbon, gives you these great signals and still upward momentum, as you can see right in here. This is all part of the analysis that we give when we share our charts with our level 4 members. And as I said, this is the whole grid you can see right over there with all 4 charts for all 3 of the indexes, NASDAQ, S&P 500, and the Russell. So that is using the level 4 charts, and you can see it's been in very, very bullish condition and is still pointing, other than some minor pullbacks, to continuing to move to the upside. Now, what I want to do is go to the market condition indicator. So this is included with our level 4 membership, and you can see in here the conditions. Now I'm looking at the intermediate. There's several ways you can look at this. You can look at the trader mode that we're in right now. You can look in the time frame mode, and of course 115 different symbols that are in here, and you would be able to look at all those symbols on there and be able to even look up individual ones. So what I want to do is go back to the trader mode right over here. I'm going to choose the intermediate right there, and I want you to see the intermediate readings here as I look at the readings here on the 4 indexes right here that it has. S&P 500, the NASDAQ, and the Russell. The reason that this is not bullish and not very bullish is because the monthly reading here in the slim ribbon is not very strong. In fact, it's negatives in the Russell, so that's not very good. But you can see on the intermediate term, it is still quite bullish. When I switch this over to the short term, everything is very bullish, and you can see the dates on there when it changes. And there's a change log in here when any of these change based on the time frame. If you are a near-term trader that is a very short-term swing trader, you can see in here that the Russell is the one that's going to neutral, as the 15-minute indicator has now turned negative. And if you were a short-term intraday trader right there, well, that information is there, and it shows you, well, it's still been very bullish, but the conditions here for the intraday trader is neutral on the IWM, and this is right now here at midday on Friday the 14th. So you can just see how you can toggle in there. It's fantastic information, and just want you to see that the sum of the evidence has been very powerful. This is the trade setup conditions in here, and you can toggle in there, and you can see which ones are very bearish or bearish as I use that and toggle to the downside. So this is just an unbelievable application and included in our level 4 membership. So I wanted to show you the market conditions. Now let's just move over to chart streams, because I want you to see all of these live at work. This is our chart streams, and this is all live. S&P 500 is where I want to go, and then we'll look at the Russell because I want you to see something in there. So here's all our analysis. I'm going to turn this on and click it live, and this is now running live, as you can see, with our momentum here on the weekly. That's what we show on there, but this is the daily with our analysis. This is the 2-hour with our analysis and support and resistance, and this is the 15-minute right in here. So the conditions as I described to you on those other charts still show you that here you could see all of these things are bullish. So if you had this thing running live, you'd have all of our indicators anyway for the indexes, as you can see right in there. So here the S&P 500 15-minute had a pullback, but still, as you can see, looking bullish, and you can see the signal right over here of the upward momentum resumption right there. So just unbelievable information. Now keep your eye on this 15-minute right over here, because when I switch over to the Russell, you'll be able to really see a difference. So I'm going to close this, and I'm going to go over to the Russell because I want you to see the overbought signal that we had in here, and I'm going to turn this live. And again, you can see in here, well, the Russell turned down on the 15 minutes, and that one has turned negative. You can see that this is red right over here, and that's telling you, well, if you wanted to be in a pair trade, well, you'd be buying the S&P 500 and shorting the Russell intraday. Here you could see still strength right in here, and a lot of strength right there. But this is what I want you to see. See these two little orange dots right over there? That is telling you the option condition indicator has turned into an extreme overbought condition, and that is causing these declines right over here. It may be an indication that the stock market is about to have that little pullback that we're talking about right there. So extreme conditions right over here in the Russell, and that is telling you that it is likely to be pulling back for just a little bit, and probably influencing the stock market to be stalling in here, at least at some key levels. So that is a look at askSlim chart streams. You can see all of the great things that are in here. These are all live with our analysis on there, so just important. And for intraday traders, that's the SIR intraday. That's the 15-minute charts that you can trade off of absolutely live. All of that, of course, included with level 4. That is the update in the analysis for the S&P 500 and the indexes. I wanted to take that deep look in there so you could see, using the level 4 chart grids, the value of it and the other indicators, and the importance of being a level 4 member here at askSlim. Unbelievable support that we give you. You get everything that you see here on this chart. I'm not going to read it all to you. I did earlier in the show, but you can get a 35% discount for level 4. Just click the Learn More button up at the top at askSlim.com, and you will be able to see what is included in this amazing top tier level at askSlim.com. That's it for the show. If you're new, get acquainted, sign up for level 1 on YouTube, subscribe to our channel, click the notification bell, like the video, and watch member videos in the playlist. Give you a good idea of what we do. On Twitter, follow us at askSlim. Any questions you have on the huge amount of information I have presented to you, write to Matt at askSlim.com. I want you to be so careful because it is so crazy out there, and I'm always wishing you great trading.